Okay, good morning again, guys. Let's start off with a new topic today. We're going to start with a new topic. Before I go to accounting standards, if you look at our syllabus, right, we have 30 accounting standards, which will take roughly about 70 to 80 hours of our lecture. And the rest of the chapters will take another 80-90 hours. Okay. What are the rest of the chapters is this? We've been seeing this for the past few sessions because did we finish financial statement of companies? Yes, we finished the illustration sums. The additional sums and theory is pending, which we will take it up much later. If you are seeing today's video, we are going to focus on another chapter from this, buyback. In this module 3, easiest is buyback. To put it in simple words, in this module, I say module 3, easiest is what, guys? Buyback. Okay. And for some reason, this chapter from the old syllabus came to new syllabus. So today, we are going to focus predominantly on this chapter. This chapter, even though it's easy in terms of exam viewpoint, it's a scoring area. You will get a 6 mark, 8 mark, or even sometimes if you are lucky, a 10 mark question comes from this. And if it comes, it's good to score. But this chapter teaches us a lot of concepts. Okay. So if I break down buyback into 3, today's agenda is first to understand why buyback. Why somebody is doing buyback? How is it different from other things like rights or bonus? Second, the theory part of buyback, which is basically section 68 and 70 of Companies Act, which I will be taking because it's there in the book. Okay, the theory part, they might ask theory also in main exam, especially with MCQ. Anything can come. So every word in the book I want to cover. Clear, guys? This theory I will classify into, just for our classroom classification, key theory, other theory. And lastly, we will proceed to solving sums. So the flow is going to be like this. We are going to first understand why buyback is needed. Then we will understand the key theory. Without key theory, you can't do sums. We will finish that key theory. Basically, everything is part of 68 and 70. And then we will focus on other topics. Are you following, guys? Clear? Other theory, miscellaneous, and finish. That's the agenda. So, the agenda set straight. Today is about buyback. What is buyback? Anybody? Online recording, think what is buyback. Sir is not asking me. No, every question I ask is I'm asking you. Live and recording. What is buyback? Okay, let's look at some basic terms. Rights, bonus issue, redemption of preference shares, redemption of debentures. In our old syllabus, all these chapters were there in accounts. All this was there. Now in our latest new syllabus, rights, bonus, redemption of preference shares and redemption of debentures, everything is removed. Only buyback is still kept. So for example, let's understand, even though it's not part of our syllabus, you should know what each term represents. Only then we can do a holistic learning, correct? Let's be very quick over here. What is bonus issue? Shares given to existing equity shareholders for free. Correct? If company has 10,000 shares, I am issuing bonus in the ratio of 1:1. If you are already having 500 shares, now you will additionally get 500 shares. Are you following, guys? Rights issue. Same, if there are 10,000 shares, if company is issuing rights in the ratio of 1:1, if you have 500 shares, now you will additionally get 500 shares. But the difference is, in bonus you have to pay anything, it's free. The name bonus says, in rights you have to pay. You are getting the first right to buy company shares. Are you following, guys? Got the difference between rights and bonus? Super. What is redemption of preference shares or redemption of debentures? Repayment. Redemption means repayment of preference shares because life is 20 years. Within 20 years you have to redeem. Debentures life is 10 years. Within 10 years you have to repay. You got the basics, guys. Don't have to worry because this entire part is not in syllabus. That's why I'm not even spending more than 5 minutes here. Hardly few minutes. Just to understand what is that. Clear, guys? Recording. Okay. Recording, if you're watching the class laying down on the bed, get up from that. Okay. Next. Getting to buyback. What is buyback? Why buyback happens? What are the procedures? First, what is buyback of shares, guys? We have two types of shares. We have two types of shares. Equity and preference. If preference is going to be repaid, it's called redemption of preference shares. It's called redemption of preference shares. This is mandatory in law where I have to repay within 20 years. If equity shares are going to be repaid, it's called what, guys? Buyback. So buyback, the term is applicable only for equity shares. Sir, I am still not able to understand. Let me give you an example. Let's take a balance sheet with equity share capital 30,000 shares of 100 each. 30 lakhs is the share capital of, let's say, Tata Limited, okay, or Tata Motors. Now, assume these 30,000 shares are held by, let's say, Dinesh. In this 30,000 shares, Dinesh has 3,000 shares. How many shares, guys? So, the company, when I say the company, I am talking about Tata is repaying money to Dinesh. Hey, take your money back. When the company started, you helped in giving money. Now take the money back. So Tata will pay to Dinesh 3,000 shares. Let's say I pay him 100. He's getting how much? 3 lakhs. And from Dinesh, I will buy the share back. That means, can I say roughly the entry will look like equity share capital account debit to bank 3 lakhs. So my new share capital will now become 27 lakhs. Correct? This is buyback. In simple, reduction of share capital is not the right term. Reduction of share capital is something else. Buyback is the number of shares of the company will reduce. Therefore, the paid up share capital is reducing. The company is buying back the shares from the shareholder and we pass an entry like this, equity share capital to bank. Are you following, guys? Fine. I have understood. Now, what is buyback? Everybody clear, guys? Loudly is what is buyback? Fine. No, until I hear a loud yes or no, we will not be proceeding in the class. Are you following, guys? Perfect. Recording, I hope you're able to hear that. I'm doing that so that here students are active and recording you get to hear some mild sound. So you also say yes. Okay. Next. Now that you know what is buyback, why buyback? Why? Come on, anybody, why buyback? To get the shares back. Why? Okay. To gain control of the company, there are many reasons. First, let's start off with same example that we took. A company has 30 lakh shares of 100 each. This only was our balance sheet. Imagine you are the shareholder for these shares. Okay. 100 is what? Face value or market price of? Face value. Remember guys, whatever comes in balance sheet for shares is always face value. It's always going to be face value. Is that clear guys? That's always going to be face value, face value, face value only. This share will also have a market price. Hello. So let's say market price of this share is 250 rupees. Sir, I am not able to follow what is market price. Today I will show you of some other company's market price. We will see a real life scenario of a company doing buyback. So if you are a shareholder of 30 lakh shares of 100 each with a market price of 250, that means you can sell in the market for how much? You can sell in the market for 250 minimum, correct? Are you following guys? Now I want to buy back from you. Company is offering, hey, give the share back to me, I will buy it. I am offering you 4 prices. You choose which one will you accept. 220, 250, 260, 270. I am telling, hey shareholder, I will give you 220 rupees per share. Please give the share back to me. Will you sell? Why? Market price you can sell for 250. I am saying a market price 250. I will also give you 250. Give the share back. Will you give? Why? What benefit are you getting? For that, now I can go and sell in the market itself. Why should I sell to the company? 260. Hey, 10 rupees higher. If I wait for 1 month, market price can go up by 10 rupees. 270. Maybe yes. Because market price one share if you sell today only 250. But I am giving you 270, or I will tell you now, I will give you 350 per share. Will anybody say no? Everybody will say, yes, give it to me. I want to buy back. Correct? So, first rule to remember is the buyback price in reality and in theory will be more than market price. Only then you will be interested to sell. The word interested is important. I can influence you only with the higher market price. Is that clear guys? Fine. Still I am not able to understand why buyback. Why? Why buyback guys? This chapter has so many beautiful concepts. Even though the application is limited. Now you all understood what is buyback. But I want to know why. Okay, simple question. After buyback in this scenario, after buyback, will the market price increase or decrease? Increase or decrease? I can hear the word increase. Let's check. What is the value of company before buyback? 30 lakh shares into 250 per share. Can you multiply and tell me what is 30 lakhs into 250 guys? 30 lakhs times 250. How much? How much? Fast guys, come on. 30 lakhs into 250. Recording. Don't wait for me to give the answer. Take the calculator and type it. 75 crores. Recording students, if you think, why should I type sir? Sir, you are typing here. Then if you are an offline class, you would have done it. If you are even in recording, I want you to experience like an offline class. 75 crores for how many shares? 30 lakh shares. Correct. So one share price is. That's how 250 is derived. Market value divided by number of shares. Now I am doing a buyback. I am doing a buyback and I am buying back, like I said, 10%. 3000 shares are bought back. Okay, so if 3000 shares are bought back, now I will have Okay, 10% shares, 3 lakhs. 10%, I am buying back how many shares? 3 lakhs. So I am left only with 27 lakh. 30 lakh shares minus 3 lakh shares. Now what is the value of the company? Now I bought back the share at 270. That means if I am buying back the share at 270, what will happen to share price? It will increase. So the remaining 27 lakh shares may not be worth 270 but may touch 260. Now 27 lakhs into 260 is how much? Or in other words guys, in other words, what is the value of this company? 75 lakhs, 75 crores is the value of this company. What is value of company? Asset minus liability, net assets is the value of the company. So assume the value of company still remains the same. Now divide 75 crores divided by 27 lakhs. How much? 277.7. That means share price will increase after buyback. I am not able to understand. I will give you a simple example. There is a 1 kg cake which is being shared by all of us. How many of us in the class here? 40. How much you will get? Sir, one small piece I will get. It's better I don't eat that itself. So I told 20 of you get out of the class over. So 20 of you left. Will the 1 kg cake still be here? Yes. Now we have left how many students? Now 20 students sharing a 1 kg cake. Will you get some decent small piece? Or assume it's 2 kg guys. 2 kg cake. Initially there were 40 students. Okay. You would have got one small piece. Now I sent 20 students out. We have left only 20 students for 2 kg cake. Will you get a good amount piece? No sir. I want this big piece. Eat with diabetes and cholesterol. One small piece is fine. Correct? So when the numerator remains the same value but number of shareholders reduce, then share price will, for example, if Tata Motors does a buyback, the value of Tata as a brand, will that reduce? It's just that when 40 people were sharing a 2 kg cake, now only 20 are sharing the 2 kg cake. Similar analogy here, a company is worth 75 crores. This 75 crores were shared by 30 lakh people. So the share price was 250. Now 3 lakh people left. So same 75 crores is shared by 27 lakh people. So your share will increase by 277. Are you following? So still you understood, if buyback happens, share price will. Still I want to know, why sir buyback? Why? So far are you understanding what I am telling? What is buyback? What happens when a buyback happens to share price? But I still want to know, why is the question you should always ask in all subjects. Why is that being done? Why? I used to ask my parents as a kid, why are you painting in the house? There is that door, they will keep one wood entrance. What is that called? In English, you have to jump and go. If door is there, there will be one small speed breaker. There will be like a speed breaker. Okay, we don't call it speed breaker, but something else. So when I went to my grandparents' house, they applied turmeric in olden days. Why turmeric used to be applied? So that germs don't come in. Correct? Today I am seeing they are painting yellow. They painted yellow in the house. I said, why are you painting yellow? They said, no, turmeric you should keep. Instead of keeping yellow. I said, the logic of turmeric is Germs should not come. Either you apply turmeric or you paint something else. Why yellow? Are you following? So when you ask questions, they'll tell, don't come home, don't get this guy home next time. Okay, fine. Able to follow, guys. So I used to ask a lot of why questions. When I was a kid, I used to see people getting married. Then they used to pour on each other's head like this. That game they used to play. I said, why this stupid game they're playing in the wedding? Then my grandmom told, see, today you are getting married, love marriage or arranged marriage, you know somebody for 6 months. Those days, I meet the person only in the wedding area. They will remove one cloth, you meet the other person only in the wedding area. You don't know who it is. Blind date, that is the true meaning of blind date. Okay, parents will decide, girl and boy will sit. Surprise! After they tie the tali only you will lift and see, he's your husband or wife. Then you will tell you what to do. So marriage used to say that time, now only you are meeting each other. To get that comfortableness between both of you, play those games. I said, why are you playing now in love marriage? For the fun of it. Then they said, don't get this guy next time. Keep him in Chennai itself. So, but then I started asking why questions in subject. Then I got answers. So I'm telling you the same answer. Why buyback? Simple. When company has a lot of cash in the balance sheet, we are heavily profitable. We don't know what to do with the cash. For example, if you take ITC, one of the companies with heavy cash, I don't know what to do. Either declare dividend every year or buy the shares back. Two things. Why will I buy the shares back? First option, I buy the shares back because imagine company has 100% shareholding. In that 100% I have 20%. Now from public, if I buy back, let's say 10%, now the whole lot becomes how much? Now I have 20% in 90%. Are you following? So my same percentage remains the same. If I want to put it to you in different terms, assume company has 1 lakh shares. In that I have 20,000 shares. Now from public I bought back. So percentages 20%. From public I am buying back 10,000 shares. So I am left with, but I still have 20,000 shares. What is the percentage? 20,000 divided by 90,000, how much? 22.2%. So guys, are you following? By doing buyback of others, my control is increasing. Are you following? See, I am the company owner. Buying back from you increases my control. You helped me years back. Now I don't need the help. Following? What a smart way of gaining the control back. One. Second reason why buyback is done. We have to learn all these guys because exam MCQ, we are moving towards a concept driven subject or CA final. I don't know if you guys know. Do you know there's a paper called multidisciplinary case law in CA final for the first time in new syllabus? 100 marks paper. Open book, I think open book, but it's called a case study. In Inter, what are the subjects you have? Accounts, law, tax, auditing, costing. Now, imagine I keep a paper for you, 100 marks, all subjects. All subjects, 100 mark paper. What you will do? I will tell one case study, like English school, section A, paragraph, covering tax, accounts, everything, one question. What you will do? Don't laugh, it's there in final. Multidisciplinary case law. They can ask from all the other subjects. That's the last exam. And if I am right, I need to cross check. It's a 4 hours exam, not 3. And open book. You take all subjects and go. But he will ask you case study. First time in new syllabus. You are the inauguration batch. I escaped. Okay. It was that earlier. It was optional paper. It was elective. Previously it was optional. Nobody took that option. So they made it mandatory. So you can't clear CA without passing that paper. But don't worry guys. After inter, final, there's 2 more years. So by then, your conceptual knowledge will increase. So come back here. Did you all understand the first logic to increase the control? All these are points in textbook. I will show you. Next. Second last reason. Basic economics concept. Okay. Let's go back to COVID days when mask and sanitizer was, how much was one mask in the first wave? One mask in the month of March, April, May, June 2020. Very hard to get. It used to be how much? 20, 30, 50 rupees people used to sell one mask. Correct? Even much higher. I remember selling for 100 because we have a pharmacy, I know. N95 100. Sanitizer was sold for 300, 200, 400. Initial 2-3 months. Do you remember guys? Why? Why was it sold for higher price? In fact, in our pharmacy, in every pharmacy, this was the price. Because we had limited stock. Only 100 bottles of sanitizer left. So we sold one for 300. Then when the price reduced, one government bought regulation. But even apart from that, many people started manufacturing mask and sanitizer in the house. And the supply increased. Because supply increased, price automatically falls. Economics guys. If you increase the supply, so if I increase supply, price will. Now if I decrease supply, again I'm asking, if I decrease the, let's say Sunday you're going for biryani, one shop. If they have 1000 biryanis available, they are selling for 250 per biryani. I want to create demand. Purposefully, I will manufacture only 200 plates and keep one biryani at 700. Best in Chennai, I will say. Okay. Or best in Hyderabad, I will say. Now, everybody will fight for this. They will go at 12 o'clock and wait. Because available stock is only, I'm saying, organic biryani. I can't do more than this. So, if I reduce the supply, price I can. Now, in markets, market price is the share price. I feel my company's share price is very less. Sir, only 70 rupees, sir, market price. I want to increase the market price. What you should do? Perform well. Get good profits. I want shortcut. Weight reduction. No need gym. Medicine, is there any medicine if I take weight will reduce? Like that I want a shortcut where what if I do, the market price will increase. Reduce the supply. Earlier in the market, there are 30 lakh shares available for buying and selling. I will do a buyback and reduce to. So the number of shares available in the market is reduced. So supply decreases, price will. That's it. Beautiful concept. How buyback is used. So with this logic, even though it's not part of our syllabus, bonus issue, if you understand the logic, you will tell me. After bonus issue, share price will increase or decrease? Company's value is 2 kg cake. Earlier 20 people are sharing. Now 40 people are sharing. Your share of cake will. Number of shares of a company is 30 lakhs. For a worth of 75 crores. When I make a new issue of 30 lakhs, I will get 60 lakh shares. But bonus is free shares. Value remains the same. So instead of 75 by 30, now you will have 75 crores divided by. So share price will. Hey, I increase the supply. Increasing supply by bonus, share price will and has to fall. Are you able to follow guys? Clear? Hello? Fine. Sir, for exam viewpoint, you've been talking for the last half an hour, sir. What is important for me? Are you guys following, guys? What is important for me? Exam viewpoint. You learned what is buyback. We also learnt how buyback is done. We saw reduction. We are also seeing what? Why buyback? Two main reasons. Company has a lot of cash, and to increase the share price. And one more thing we saw, because there is lot of cash, one we saw was increasing share price, and to gain control, correct, to increase control percentage. Remember seeing that. Why should you learn all these? Tomorrow when you go to a company as a CFO, you can be CFO of a listed company before you turn 30. But you become CA when you're 20, 21, 22. 8 years if you work in the company, prove yourself, you can become CFO. There are so many CFOs below 30 years. Air Asia CFO many years back was just 25 years old. So when you become the company's head, they will tell, hey, as a company, our control is less. How to increase the control? Do buyback. These are real life scenarios. As a company, my share price is very low. How to increase? Do a buyback. That time, nobody will come and tell you technique. You can't go to a consultant. You should know all this. Are you following, guys? You are not learning just for the exam. Exam also, yes, we're going to go exam oriented. But we're learning for life. Concept is what I'm going to tell. Clear, guys? Fine. Now that we learnt all of this, for us in exam, they are predominantly going to test how to account for buyback. So now I told in the class agenda today, what is buyback, why buyback? That part only is done. We still have theory, key theory, other theory, and sums. I don't want to again come back to theory. Now straight away I am going to sums. We are going to solve one or two sums. Are you following, guys? How to account. Okay, how to account. What entries should we pass? Book has, sir, template 5 entries. I don't want to mug up. We are going to directly solve sums. Okay. First, let's take a balance sheet where there are 10 lakh shares of 10 each. Buyback price is 30. Are you following, guys? There are 10 lakh shares of 10 each. Buyback price is 30 rupees per share. Is this clear? Hello? Buyback price is 30. Now, follow buyback price. How much, guys? 30. What entry should I pass? Now, equity share capital is reducing. Now, you are the shareholder. Let's say I am doing buyback of 10,000 shares, for which I am paying how much per share? In balance sheet, it's 10 lakhs into 10. Are you following what I am telling, guys? Hello? Clear? Any doubts? Loudly, guys. I can't hear you, guys. Recording, come on, you can't sit silent in the house. Okay. Now, follow. What entry should I pass? Equity share capital is reducing. So, what I will debit? Equity share capital account. Don't tell, sir, please don't use pink pen. I don't like pink. Randomly I'm using, guys. Okay. Equity share capital account. Debit, correct? Debit by how much? How many shares I am buying back? Into 10 or 30 or? Into 10. Why into 10? Because face value of what is reducing is 10,000 into 10. Are you following, guys? Fine. Next. But I have to pay how much? I have to pay to bank. How much should I pay, guys? 10,000 into 30. Correct? So, So I'm just moving to the entry, guys. So when I debit, I will debit how much? 10,000 into 10 is how much? 1 lakh. I will credit. What is the other debit? Isn't this my entry? Hello, guys. Hello. Isn't this my entry? It's not tallying. I have passed equity share capital account debit 1 lakh to bank 3 lakhs. So what to debit for balance? Labor, payback, buyback. Payback chapter name, maybe we can change it. Okay. Recording students, ignore. Okay. No. Fine. Okay. Follow, guys. Now, very simple concept. I can give you the answer. I always can give the answer in 1 second. I can finish discussion till here in 5 minutes. Now, asset, liabilities, share capital, reserves and surplus. Correct? What belongs to shareholder? Share capital and. So when he is leaving, will he take only share capital or even reserves? So if company is profitable, reserves will be high. So I debited share capital. What's going to be the other debit? Reserves and surplus account. Because what belongs to shareholder is equity share, face value, and over and above face value is the reserves, the profit earned over the last few years. Correct? Correct, guys? To give you an analogy, not a positive analogy, but if Siddharth Malia, Vijay Malia's son, wants to take money from his dad, Vijay Malia, will he take only Vijay Malia's current earnings? Even the savings he will take. Correct? So, when he is taking the savings also, when company I am repaying to shareholders, equity share capital face value is what you paid when you became shareholder. Correct? Face value. This is the earnings of the company. Premium. Are you following, guys? This will be the entry. Clear? Now, do you think payment will happen on the same day of the day I am announcing buyback? See, I might announce buyback on 10th October 24. Actually, payment can happen on 15th October 24. Correct? Are you following, guys? So, the previous entry is an entry which is correct if announcement and buyback happens on the same day. So while announcing, I will pass reserves and surplus account debit, equity share capital account debit to, I can't write bank because I am yet to pay. I am going to pay only here on 15th of October. So 15th October only I will write what? To bank. But whom I am paying? Now this becomes a liability from this day. So I will write shareholders account and then here I will debit shareholders account. So basically if I knock off both these, effectively it's the entry we learned. Are you following, guys? Hello? So first entry in buyback is reserves and surplus account debit, equity share capital account debit to shareholders account. Second entry is shareholders account debit to bank. Is that clear, guys, for everybody? Perfect. Ideally, all the 40 of you should be louder than me. Is it clear, guys? Very good. This will be my entry. Next, I am developing slowly, guys. I don't like to tell you, hey, look at the book, entry 1, 2, 3, 4, 5. Let us mug up. No, we are not doing that. We are not going to do that. We are only going to do what? Conceptual learning and creating the journal entries. Now, so you have learned the first two entries in sum. What's the first entry? Loudly, guys. Reserves and surplus account debit. Equity share capital account debit to shareholders account. Next entry, shareholders account debit to bank. Online recording, what happened to your mouth? Is it paining? Why are you not talking? Okay, fine. Repeat with me, guys. Here, if I see anybody not repeating next time, I will send you out. You come back only for next class. I am very serious. I need the energy in the class. If you're going to come sit here and sleep till 1 o'clock, 2 o'clock, then you better stay home. If you are sleeping, it's okay. At least you are participating. General solra. Okay, fine. Following, guys, clear? Now, company has many reserves. What are the reserves company has? General reserve, P&L account, securities premium, then capital reserve, revaluation reserve. There are many reserves. Which reserve can I debit is the next question. Which reserve? Now, shareholders are taking their money and leaving. What is their money? Free reserves, the money that they gave to the business. General reserve, profit and loss account, securities premium. Why securities premium? Who gave the premium? They gave at the time of issue. In school we studied share issue with premium. Foundation we studied share issue with premium. So they gave the premium. So when they are taking the money, they can take premium. Capital reserve, they gave a it's profit on sale of asset, like that. They didn't give. I earned. Revaluation reserve, did you give? My asset value increased. So I can debit only when I say reserves and surplus here, it is only free reserves. Are you following, guys? What are free reserves? General reserve, profit and loss account, and securities premium. These are free reserves and nothing more, nothing less. So, in the previous entry, instead of debiting reserves and surplus, you should debit either general reserve, profit loss account, or securities premium. Are you following, guys? Understanding? Is this the end of concepts? Sorry, we are just in the trailer of concepts in this chapter. The movie is yet to come. But with this knowledge, we can solve a sum. Otherwise, you will tell sir is taking theory class in accounts class. Quickly, we are going to go and solve a few sums. Today, after today or after this session that you are watching, you can be exam ready for buyback. I can guarantee you that. Okay, we might not finish all the sums, but we will be exam ready. In module 3, ICA module, page 111, for us, questions, that's it. Buyback of securities. Theory, I will come back to it when in the same session. Okay. Illustration. Perfect. Illustration 1, guys. Clear? Is the same thing there for you? Of course. The agenda of this batch, new syllabus for me, is to solve each and every sum in our class. Or even if I give it to you as homework, I will run through the solution. Because take it from me, for the first 2 to 3 attempts in new syllabus, your question is going to come only from the book. Then don't tell, sir, 100 marks didn't come. 70 marks is going to come from the book. 30 marks, related sums. That's it. Are you following, guys? Question number 1. Now do you understand why I wanted you to learn Schedule 3 format of balance sheet and P&L first? If any recording student is watching this chapter first before watching Schedule 3 preparation of FS, please go watch that and come back. You can still understand, but that format part you will miss. But concept are same. Imagine, for those who don't know Schedule 3 watching this, think like T format. Okay. We have the balance sheet of M Limited. Let me run through the question, guys. Earlier batches, I used to make someone read the whole question. Now, I will run through the question. You have equity and liability, shareholder funds, share capital, reserves, then long-term borrowings, trade payables, 11,750, glance. Anything abnormal here? No. Come down. Non-current assets, property, plant and equipment, non-current investment, inventory, trade receivables and cash equivalents. I asked you why we call it property, plant and equipment. When I take AS10, I will teach you. Anything abnormal here? No. Balance sheet is tallying. Some students in exam, they will check if this balance sheet is tallying. In calculator, he will add all this and tell, yes sir, balance sheet tallied. Exam. Don't waste time for this. Very rarely there will be a mistake here. So one batch, one student sent, sir, there is mistake in question paper. Total is not adding up. That's not your problem. ICA will award grace marks. But these kind of mistakes used to happen years back. Today the standard of paper runs through multiple revisions. One person will set, another 2 people will do again check. They will do a mock run. A qualified interest student will be asked to solve the paper to see if he is able to solve in 3 hours. They will check if there are mistakes. It goes through rigorous testing before it's given out. Because if mistakes come, whose reputation is damaged? ICA. That's not a small thing. It takes so long to build reputation. So much effort is taken, guys. So you don't worry about mistakes. There will be mistakes in question in our class workbook, printing, typing mistake, not in the main question paper. Are you following, guys? Then notes, they gave authorized, issued and subscribed and paid up totally 5,000, equity is 3,000, preferences 2,000 in thousands. Or in other words, if you want exact computation, it is 3 lakh shares of 10 each, which is 30 lakhs. Should I bother about preference shares? I can actually strike it. Don't strike in the book. I meant what? In your mind. Ignore that. With preference, nothing to do with the sum. Then there are reserves. We have capital reserve, revenue reserve and securities premium. Are you following, guys? Okay. And then we have profit loss account, long term borrowing, some debentures, some property, plant and equipment, all of that. And for buyback, they are saying the company passed the resolution to buy back 20% of its equity share capital at 15 per share. I told you there is a lot of key theory. I am yet to go there, guys. Yet to go there. For this purpose, it sold investment of 30 lakhs for 25 lakhs. You are required to pass necessary journal entries. This sum, will it come in the exam? Sorry, no. This sum is to get familiar with the journal entries only. There is much more to validate the numbers. Are you following, guys? So let's write the facts first here itself. How many shares the company is going to buy back? 20%. Totally above we saw, they have how many shares? into 20%. How much? Honestly, how many of you use calculator for this? Good. Recording, if you went to use calculator, come on guys, 3 lakhs into 20%, you should know it is 60,000. So 60,000 shares are being bought back at 15 per share. So in that face value is 10, premium is 5. This is not premium received. This is premium on payment. Premium on payment. Are you following guys? All of you with me? Hello? Understanding guys loudly? So I am going to repay 60,000 into 15. So share capital reduction is 60,000 times 10. Reserves will be 60,000 times 5. For which they sold investment of 30 lakhs for. Why they sold investments? Cash is 1,000. Maybe it is sufficient, but they need more cash. So they sold it. Correct guys? Let's pass the entries. Entry 1 is for sale of investment. When they sold investment, how much they realized? Bank account debit 25 lakhs. When you are writing journals, I want you to prepare the template. What template? Journal entries in the books of, look at this guys. Journal entries in the books of M Limited. Particulars. Date. We are not writing because they have not given. If date is given, write the date. Debit, credit. Are you following guys? So prepare the template. Enough template to pass 1, 2, 3, 4 journal entries. Just 4 journal entries. Fine. So first entry is sale, coal. We will turn it off for a while, no worries. First entry, I told offline students, bring sweater and come. Comfortably bring. If you want, get blanket and put it. Put sweater because it's going to be like this for next 200 hours or 150 hours. So find ways to cope. I will also try to see if I can change something for myself. Bank account debit 25 lakhs. Two what guys? Online. 2 investments because I'm selling investment for 30 lakhs. Hello. So balance debit 5 lakhs will go to what guys? What is the 5 lakhs? 25 lakh, 30 lakhs investment sold for 25. Loudly, what is 5 lakhs guys? Loss on sale of investment account. So first entry, write down guys in the notebook. Journal entries in the books of M Limited. Loss on sale of investment account debit 5. Bank account debit 25. 2 investments 30. Are you following? Hello. Then next entry is this. We had the workings here. 30 lakhs into 20%, which is 60,000 shares into 15. So I need to pass the buyback entry for this. Let me write the numbers here so it's easy for you to have a look. 60,000 shares into 15, 10 face value, 5 premium. Correct? Huh? What's the entry guys? What's going to be the entry? To shareholders account will be 60,000 times 15. Equity share capital account, how much? 60,000 into 10. I should debit reserves and surplus. 60,000 into 5. Go back to the question and see. What is 60,000 times 5? Is how much? 3 lakhs. Correct. So which reserve to debit? Revenue reserve is fine. Free reserve. There is so much balance in that. What is this? 4,000 and 3 more zeros. So 40 lakhs is there. Correct. So we want only debit of how much? 3 lakhs. So I will debit Are you following, guys? Hello. So if I am just going to write the amount, it will be 3 lakhs account debit, 6 lakhs account debit, credit will be 9 lakhs. Like I said, this sum is only to learn the entries. Are you with me, guys? Hello. Easy? I don't know, chapter is easy, guys. Exam viewpoint, once we finish the syllabus, you will pray, I want this in exam. Revenue reserve account debit 3 lakhs. Equity share capital account debit 6 lakhs. To shareholders, how much, guys? 9 lakhs. Hello. Following, guys. Any doubts? Okay, super. What is the next entry? Shareholders account debit 2. So my next entry will be shareholders account debit 2 bank 9 lakhs 9 lakhs. Usually these are on different dates. That's why 2 entries. Are you following, guys? Hello? Clear? Let's cross check our entries. First one, exactly what we did, correct? Hello, is that what we passed? Bank 25 to investment 30, loss is 5 lakhs. Same, instead of loss they debited. Profit loss account is the same thing. Look at entry number 2. Equity share capital. Instead of directly debiting reserves, they are debiting premium on buyback to equity share capital, equity share buyback to bank, and then what they are doing, this premium is transferred to securities premium. You can use anything, guys. I am still yet to teach that concept to you. For now, free reserves. Okay. So what they have done basically is they have passed one more extra entry. Basically, instead of debiting revenue reserve, what is debited here? Premium on buyback. We will do that. I want entries, the premium on buyback. Next entry will be revenue reserve or securities premium account. I am still yet to teach the theory. 2 premium on buyback. How much? 3 lakhs. 3 lakhs. Are you all following, guys? Hello? Any doubts still here? Easy, guys. Entries easy. Every sum, same. Doubt? I'm coming there next. Done, guys. Now, I was about to come there next. Now, how many of you, honestly, including recording students, wrote narration for all these entries? Straight up, hand up, straight. One, straight up recording. What you guys should do, take a red pen and strike your friend's note. Strike the friend's note saying narration missing, 0 marks. Write down no narration, hence 0 marks. Strike it guys. If you are not striking, I will come there and strike your notebook. Yes, no mercy, 0 mercy guys. Dhaneshwar, get up, take the red pen, go around, strike everybody's note and come fast. Otherwise I will strike your note. If fast, see the girl side, boy side, recording, strike it in your notebook and write no narration, 0 marks. Don't tell sir didn't tell. How did half the class do it if I didn't tell? So you should do it. I'm sure some recordings did it. Strike it guys. Fast. Dhaneshwar, look behind you. That girl is writing. Strike her note before she writes. Go for everybody. Strike it. Strike it guys. Online students, be honest, get a red pen, strike it. Hello. Okay. Sir, everybody who got the strikes in the class and recording who are honest, if you are a honest, loyal, integrated person, if that is your character, recording students, strike it by yourself. Okay. Done guys. Now, sir, why didn't you tell before, sir? You didn't write narration, so I striked it. See. Now, why am I doing this? If all your entries are correct in exam, and if you don't write narration being, 0 marks. Are you following guys? I will not tell you narration. You should know when you write a journal, if it is without narration, it's not complete. It's like wearing only pant and coming out without shirt. It's like that. Narration is like that. It's missing. It completes the journal. Apologies for the examples I give, but I want you to understand the seriousness of the narration. Are you following guys? Clear recording students? So from now, next time, if you miss the narration, I am not going to tell. Why should I tell? You should know it. You know how to write narration. If narration is missing in any of your friend's note offline, just tear the page. Every page that you tear, I will give you 100 rupees. Okay. Recording students, honesty guys. The first principle of our class is honesty. So you strike it by yourself and tear the page by yourself. Recording students, okay? Fine. Done. Yes. Anybody, any doubts? And strike and write. I got striked because I forgot to write narration. Okay. Done. Clear guys? Why am I doing it? I have seen students answer sheet in main exam, not this chapter, many chapters where all the 10 journal entries were correct. They didn't write even one narration. For 8-mark question, he got only 2. Okay, because narration was missing. Examiner can be brutal. Don't give him the chance. Don't give him the chance. Your paper should be such a way, he should search to reduce marks. Follow guys, your competition is whole of India. Lakhs of students are writing. In that, if you have to stand out, you can't write, I am this, follow me on Instagram, I am a special student. You have to stand out with the answer. Okay, fine. So now this sum, our agenda is, we have understood entry 1, entry 2, 3. Now coming to the last entry. Last entry, one of the beautiful concepts in this chapter. I will be taking up today in this next session. Today we will be done. Recording students, if not this video, next video it will be there. But if you are watching and hearing this, immediately go. Ensure you watch the next one. It's a group. Okay. They are saying, first I will finish for exam. Finish for exam. there is a buyback, the face value of shares bought back should be transferred to capital redemption reserve. It's a requirement under section 69 of Companies Act. Simple. Whenever there is a buyback, the face value, highlight the word, face value of shares bought back should be transferred to capital redemption reserve. Then leave one more line, subject to, continue, subject to proceeds of fresh issue. That's it. With this, the statement ends. Very powerful statement, guys. Whenever there is a buyback, the face value of shares bought back should be transferred to capital redemption reserve subject to proceeds of fresh issue. Good. Some of you are writing in red pen, that's very good. Others wouldn't write in red pen, put a box around it in your note and ensure you focus there. Okay. I will teach you logic, but first let me finish for exam. Since you have all written this, 69 is section 69 of Companies Act. Okay. No subsection, only section. Okay. Fine, guys. Now in this question, what is the face value of shares redeemed? What's the face value, guys? How much? Value. 6 lakhs. So my entry will be last entry, revenue reserve account debit to capital redemption reserve 6 lakhs. This will be the entry. Same thing is over here. This is my last entry, guys. Have a look at the last entry. I hope you can see that revenue reserve account debit to capital redemption reserve being creation of capital redemption reserve to the extent of equity shares bought back. How much? 6 lakhs. This entry will come in every sum of buyback. Now, for exam, if you memorize this, it is enough. But I need to know the logic of this. Are you following, guys? With this, illustration 1 comes to an end, guys. These 4 entries, illustration 1 comes to an end. Before I get to the concept, just for practice, let's do, here they are going to do buyback of preference shares. They redeemed what? Preference shares are redeemed. Fine. Okay. So very subtly what they have done, in the chapter of buyback, they have kept a few sums for redemption of preference shares, nothing to worry. Same, copy paste. Here in the entry you wrote what? Equity share capital. Here you have to write preference share capital. I am not getting into the concept now. That concept alone will take me 20-25 minutes. Let's do sum 2 for us first exam what I have to do. Okay, how many of you are curious to know why this entry? Others, sir, I don't care, sir. Entry I will pass, exam I pass, enough. Okay, let's look at illustration 2. Same sum. Instead of equity we have preference. Earlier old syllabus we had a separate chapter called redemption of preference shares. Now in buyback they are including a few sums. That's it. Nothing to worry. Both are same. Instead of equity use. So let's quickly do sum number 2. Anu, a non-listed company. I will tell you significance of non-listed, listed later. Furnishes the following. Okay, I can see share capital, reserves, all of the trade payables. Assets are given, fairly fine. Reserves is totally 300. Come down. You can see breakup. Breakup, guys. This time my focus shifts to preference shares. 75 rupees in lakhs, rupees in crores, guys. Rupees in crores. So 75 crores divided by 100 each. What is the number of shares? How much? 75 lakh preference shares, correct? Here they gave equity shares. I will ignore equity shares now. Reserves breakup is given. Capital 15, securities 25, revenue reserve 260. All these terms have greater implications. Once I teach you concept, then you have some assets, etc. Same sum. Instead of bought back, now company redeemed preference shares on 1st April. It's not a separate chapter, it's part of this, but same, easy. It also bought back 50 lakhs equity share of 10 each at 50. Oh, so both, sir. Redemption of preference shares and buyback. If you see the old syllabus, buyback chapter used to have 1 or 2 small adjustments of redemption of preference, redemption of debentures, little bit of bonus used to come. So this chapter also we can expect that, and I will teach you those entries. So they did both preference shares redemption and equity share buyback. The payments for above was made out of the huge bank balance. Money is there, don't worry. Past journal entries. Prepare the balance sheet after buyback. Are you following, guys? This sum is to focus for exam. What are the journals? Pass the journals, fill the values, transfer to CRR. So now what you do in this note, you write, in case of whenever there is a buyback or, what is the other one, or, guys? Redemption of preference shares or redemption of preference shares. Add it somewhere. Sorry about adding it later, but add it somehow. Whenever there is a buyback or redemption of preference shares, rest of the statement is same. Whenever there is a buyback or redemption of preference shares, company should transfer to CRR. Trust me, guys, the concept of why I should transfer to CRR is one of my favorite concepts. Beautiful concepts. We will do it immediately in the next session recording. You can look at that with the key theory. Now, agenda is what, guys? This session will end once this sum comes to an end. Are you following, guys? Simple. Let me write down the values. I am focusing on exam. Exam, what to do. Correct, guys? Are you all okay with this style of teaching? Hello? Fine. Let's summarize the facts. In this question, follow. First, there are how many shares? Let me write down the facts here so it becomes easy. Let's write down the facts. Company has how many preference shares? And each share is worth. This is fully redeemed, 100%. Correct? Because question says what? Are they giving percentage? Company redeemed preference shares. That's it. Fully. Next, coming to equity shares. How many equity shares do I have? Equity shares of 10 each, 25 crores divided by 10. 2.50 crore shares. In that, how many he is buying back? 50 lakhs shares. Correct? So, totally I have 25 crore, correct? 2.5 crore shares. In that, buyback is 50 lakh shares. Are you following, guys? Hello? At what price? At rupees 50 per share. Did they sell any investments? No. So, look at the flow of entries, guys. For buyback of shares, I have to do one due entry, one payment entry, one transfer of premium entry. 3 entries. If there are 3 here, here also 3 entries, 6 plus 1 entry is what? Combined CRR entry I can transfer. Are you following, guys? Hello? Easy? Now, you tell me the values, guys. Tell me are you following? First, do you want to do preference or equity? We will finish one, do the next. Preference. First, let me do preference. Preference is totally 75 lakh shares into 100. So, first entry will be preference share capital account debit. As we keep going, I will reduce solving. We will look at solutions. Preference share capital account debit to preference shareholders account. Hello? Amount 75 lakh shares into 100, which is 75 crores. That will be the first entry. Preference share capital account debit to preference shareholders. Only one thing we missed is adding that percentage. That's default. 12% preference share capital account debit to preference shareholders. How much, guys? 75 crores. Next entry is payment of preference to bank. 75 crores. 75 crores. Are you following, guys? Hello? Hello, hello, hello. Any doubts? Hello, guys. That's it. Look at the first 2 entries in the book also. We have same thing. 12% preference share capital to preference shareholders to bank. Narration is usually one line, guys. Simple narration. Being preference share capital transfer to shareholders account. Next entry being preference share capital paid. Are you following? Look at the neighbors. No narration means immediately strike it. I am giving you full power, guys. For every 5 strikes, I will give you 50 rupees cash back. Strike it if you want 50 rupees. Tomorrow really I'll bring chocolates to the class and cash, you can take it. Recording students, our first principle in the class is honesty, guys. If you didn't do narration for both, or if you saw narration only after I showed the entry and then you started writing, please strike it. Be honest to yourself. Promise, okay? Done, guys. This is preference share capital, 2 entries done. Easy because we don't have premium, correct? Otherwise, if there is premium, there will be one more entry. Here I will get premium, correct? Fine, not there, good for me. Next entry for shares. How many shares? 50 lakh shares. So my entry will be again equity share capital account debit 50 lakhs into 10, which is 5 crores. To what, guys? To equity shareholders account 50 lakhs times 60, correct? Oh, it's including, it's 10 plus 40, huh? Yeah, 50, correct? You're right. Into 50, which is how much? 25 crores, correct? And then I will write premium on buyback account debit 50 lakh shares into 40, correct? 50 lakh shares into 40, how much is that? How much? 20 crores. Is this my entry, guys? Hello? Recording, I hope you guys are following. These two sums will not come in the exam. It's to master the journal entries. Because journals will be the same in every sum. Then what is the next entry? Payment. Equity shareholders account debit to bank. Equity shareholders account debit to bank. How much, guys? 25 and 25. Equity shareholders account debit to bank. It's 25 and 25. Is that clear, guys? Because 25 crores, I'm talking about 25 crores because that's what is being paid. Are you able to look at the entries and appreciate and understand both, guys? Clear? Can you guess what's the next entry? Hello? Next entry is what? This should be written off premium on buyback. Hello? This entry should be transferred to P&L or reserves. So what entry is that? What entry? 25. So 2 premium on buyback 25. What I will debit? Do I have SP balance 25 first of all? Yes, 25 is there. So you write debitor. Only 20, sorry, yeah, 20. Just checking if you guys are awake. 20 crores. Securities premium account debit to premium on buyback. Are you all following, guys? Hello? Are the entries fine? So look at this. This is my entry, correct? Look at the share buyback, guys. Share buyback to bank, how much? 25. First they made payment. Ideally, this should come first, this should come. Next entry, what we passed? Equity share capital account debit 5, premium account debit 20, to buyback 25. This same that fellow put directly. Directly is debiting what? Securities premium. What they have done? Instead of writing premium on, don't change. Instead of writing premium on buyback, can I directly write here? Securities premium account. Hello. Can I do that, guys? Hello. See, this sum is easy. I'll tell you what all complications we will have. Now I want to find out how much is transferred to CRR. Revenue reserve account debit to CRR. Can you tell me the amount? If that's correct, answer is correct, sum over. How much is transferred to CRR? Take a minute's time, 30 seconds, recording, do it. Use the notes, don't look at the answer. Compute and tell me. One answer I'm getting 5. Everything in crores. One answer I'm getting is 5 crores. Anybody else? How much? 80 crores is one more answer. Recording online over here. Give me the answers, guys. Hello. How much, guys? How much? 80. I told you it's face value of equity and preference. Look at this. Equity face value is how much? 5. Preference face value is 75. So I will totally transfer 80 crores to CRR, and that will be and has to be my last entry. Revenue reserve to CRR 80. 75 plus 5. Are you following, guys? With that, sum number 2 is not done fully. Have you understood till here, guys? Just bear with me for another 5-10 minutes to finish this sum. The question, is this clear? Anybody has a doubt? Now the question also wants me to prepare revised balance sheet. This is the balance sheet. Can you prepare the revised balance sheet roughly, guys? Let's do it together if you want. This sum I will help you. First sum. It's very easy. Look at this. Equity share capital was earlier 100. We reduced by how much? Minus 5 for equity, minus 75 preference. So new share capital will become 20. Correct? I'm doing roughly, guys. Earlier share capital was 100. I repaid 5 equity, repaid 75 preference. Look at my journals. So becomes 20. Reserves was 300. Look at all your entries from the top where all reserves are reducing. Is there reduction of reserves here? No. Is there reduction of reserves here? No. Here SP is reducing by 20 and here we are reducing by 80. Effectively, I am not doing sub breakup. So minus 20 minus how much? 200. Trade payables will remain the same. So now the new balance sheet total will be 260. Come to asset side. Non-current investment will remain at 100 because we have not sold anything. Trade receivable will remain at 140. However, we made payments of bank reduced by, preference shares reduced by. So I have to reduce by how much? How much? 240 minus 100 is how much? Sorry. 100 crores is remaining. So 200 minus 100, we have how much, guys? 100. Now, balance sheet total here is 340. Why it's not tallying? One more item we missed. Which one? We transferred 80 to CRR. So my capital redemption reserve will be 80. So now balance sheet total will be 340. Are you following, guys? I'm showing you rough. Anybody has doubt in this? I want to show you, it just takes 1 minute maximum to prepare balance sheet. Were you able to follow the speed? Now in exam, how you should do? You need to show in detailed. Look at this. Same 340. What I just did. Correct? This is which format? Schedule. And you have to prepare breakup in notes. This is important to tell me, hey, securities premium 25 minus 20, how much is left? CRR, how much is? 80. Revenue reserve, from 260 I reduced 80, 180. Capital reserve, 15. Copy paste. This breakup will carry marks. Are you following, guys? Hello? We are going to do in every sum balance sheet. Don't worry. So this is share capital and reserves. Then rest of the notes, no change. Copy, paste, except cash and bank, I am reducing 100. Now this is possible only because you know what? Schedule 3, preparation of FS. Are you understanding how that schedule 3 chapter creeps into other chapters? Are you following? So the first 2 illustrations are done, but this is like learning how to do 2 sums without understanding the concept. Are you able to pass? With this, can you pass the exam? Yes. With these 2 sums in exam, you can pass the journals and get through. But there are some concepts as to in reserves and surplus, which reserve I can use. Do you see suddenly randomly they are using SP? Sometimes they are not using SP. Logic. Suddenly you are seeing something called listed company, non-listed company. Then we are seeing CRR. Why CRR? Then we are also seeing how much preference shares, full 100% is bought back. But equity shares in this sum, out of 2.5 crores, only 50 lakhs is bought back. What is the percentage of that? 50 lakhs out of 2.5 crores. How much? 20%. Can I do 100% buyback for equity shares? See, preference shares in this sum fully bought back. Equity shares, we did only 20%. Can I do full? No. There is an upper limit. In this question, 20%. There is an upper limit, 1% is there. How much buyback you can do? There is a percentage. You can't go beyond, not 20, it's another number, 25. Beyond that, you can't do buyback. Now, these are all the provisions from law that we need to learn here and apply. Are you following, guys? Are you understanding? Clear? So, these are all the concepts. Why unlisted, why CRR, which reserve can I use, how much buyback I can do, why preference they are doing fully, why equity only this. This is the suspense, which without learning this, you better omit this chapter. And this is what we will see in the next session. Recording students, you can watch it in the immediately next recording video in the same folder for you. And once the next session of 2 to 3 hours gets over, where I finish all these concepts, you can go to exam and get those 8-10 marks here. So that's all about buyback in this session. Thank you. See you all in the next session.